In this case, this is how your eye is moving. On the left, this is the ES or any other instrument that you may want to put on the left-hand side, and you can see that it's connected with the color. All right, so if I change any of them, the other ones follow it. And then the same way, this would be the NQ from higher time frame to down to lower time frame. And in my case, I just have the 4 indexes on it. You can play the same game with precious metals or any other correlated markets like oil, HORB, and some other markets, treasuries, currencies. So it's a quite useful, I have found over the years, way to arrange the markets. And then depending on how many monitors you have and depending on which time frame you trade, you can put the strategy on any of these charts. Usually, as a general rule, we put the strategy on the smallest chart that you use because that's how we can best fine-tune our entry. How do I choose the markets to trade? The answer to the question is here. This is an objective measurement of risk, and which market I will trade depends on my account size and also depends on my available capital, which may be dependent on whether I have any other positions on the market at the current time. Let's take an example. I have, let's say, $100,000 account, and I work with a 2% risk limit, which means that at any time, at any one time, I can have max $2,000 at risk, which means I can have 5 positions on if I want, but when I add up the risk of all 5, they cannot exceed $2,000. If you do this with BT, BT can calculate the risk for you automatically, which is fantastic. I have to look at this column here, the Remek converter. The significance of this is that this is the proper measurement of risk. This simply measures one ATR on a daily time frame measured in US dollars. Look at this, for example. Look at this chart. You see, this is the bluest one. It's almost $8,000 is one ATR on a daily time frame expressed in US dollars, which means if you trade the daily chart and you use a 3 ATR risk, then it's almost like more than $20,000 risk. That's the stop you need to use. That's an enormous amount for most of us to use a stop for. So the NQ is out of the question. If you look at the 6A Australian dollar, it's a mere 500 or something dollars. So 3 ATRs on the Australian dollar is $1,500. If you trade the micro, then it's 1/10 of that. So this will, and this number changes, of course, every day because volatility changes. Which one I will trade? The one that I like best and the one that fits into my risk profile. The other correlated markets would be precious metals, for example. Here we go. So you put GC on this side and silver and perhaps platinum, these 3. Beautiful gold is another market that we are right about by and large in premium. Now, of course, knowing where the market goes or guessing correctly where the market might be going next is just part of the job because then you have to devise a trade. The word I usually use is structure a trade. One thing is to know where the market might be going next. There are some people who are fantastic at that kind of analysis, but they're unable to make money on the market. So these are 2 separate skills, and you need to master both. So one is, and this is what premium can help you big time, one is to learn to analyze price movement in such a way that you, with a reasonable, actually with a good success rate, you're able to forecast market movements on the time frame of your interest. Second, a different skill is to translate those opportunities into concrete trades. This is what's called structuring the trades, the second phase. So this is how I see it. Right, so another market would be energies, CL, HO, and RB. And what else can I think? I can think of treasuries as well. ZB, ZL, not ZL, ZB, ZN, ZF, 5-year, 10-year, 30-year treasuries. Can you think of another market, correlated markets? Currencies, 6E, 6S. So euro, Swiss franc, Australian, New Zealand dollar, very much correlated. Japanese yen, Canadian dollar can have their own life, so be careful with those. We spoke many times about those. And what else? So that's about it. So 3-4 markets you can use correlation analysis to plan your next move on the markets. Analyzing the futures markets guides my behavior on my, let's say, short-term investment decisions, which is what is just a synonym for trading, is what we do. But it doesn't necessarily mean that I will actually structure the trade on the futures market. So what does that mean? For example, on GC, we saw this beautiful long setup, which is now in motion. But if GC is too big for you, of course, you can drop down to the micro, MGC, or you can go to an ETF. GLD is a beautiful gold ETF, and you can trade. All right, so let's look at the markets. So right now, I would be very interested, as we mentioned, in trading. I'll just show you the structure on the daily chart to trade this potential measured move. Now, potential, I always use language carefully. When I say potential, it's not a sign of a lack of self-confidence. On the contrary, using words like potential or might or may is just an acknowledgement that we don't know the future. Okay, so right now, this is a potential measured move on the RTY and a very attractive one. You should be long already, or you could be, I'm not saying should, but could be long already. If you're not long yet, then certainly this action, first of all, what do I see? 6 p.m. market opened. This is the action before the 9:30 open, just about. And look at this. This was the close of 4 p.m. yesterday. It's possible that the market will close the gap before it starts the rally towards 2,500. Price already attempted to make a move to the downside, wasn't really successful. Whatever you think about trading or the market, price is price. It either goes up or down or sideways. This market is likely to move to the upside. Also, one word about time frames. Which time frame you choose will depend on, well, on your own decisions, personality, mainly account size and lifestyle. Some people want to sit here and watch a 5-minute chart. Some people want to put on a trade and go to the gym. It's up to you. Usually, the longer you trade, most traders usually find better success or more success as they move towards higher time frame. So if you look at these four, the daily chart, you see that the biggest distance is on the RTY. So if you happen to find yourself in a successful trade and you're able to keep just one contract as a runner, you can have more than 100 points on the RTY, if I see this correctly. So the distance is bigger. Of course, it also depends on your size. The distance is something which is the potential in the trade is something that I take into account. So make sure your trading plan has a plan for the transition. So first step, believe the numbers. Visit our YouTube channel and look at our Building Confidence playlist. Watch that playlist and do your own tests. And you only need one profitable strategy to trade. You don't need two. And also it helps you focus. So once you decided on the methodology, and I strongly suggest that you decide on ours because I have numbers to back it up. But once you have decided what you want to do, write down the basic rules and do it for 3 months or 6 months or whatever would give you the confidence on a SIM account and insist on being successful. Forward testing on a SIM account first for, let's say, 3 months, preferably 6 months. and develop the consistent daily routine, depending on the time frame you trade, that you are able to follow in your own life. And it's just like going to the gym. Either you do it or you don't do it. So nothing matters, just the action. So follow your own trading plan. Switch off the noise and focus on the charts. I strongly suggest that you do what I do. Or if you do something else, just use the same rigor to verify that what you do makes sense. Once you know the strategy, hopefully you're going to do what we do here, which it makes sense and seems to be working. And I don't think it's about to fade away. It's not a gimmick that might be here for a week or two. So back to the point, once you have a reasonable amount of steady months behind you on a sim account, then you can start trading real money on a on the micro contract. So relatively very small risk, but still follow the same process. And don't try to make a lot of money. That's not the point at that level, at that stage. The point is to become consistent and to make this process part of your life. Once you have that, another 6 months, you can gradually increase the size. By that time, there will be no stopping you because now you're ready for the real job. That's how I see it. And this transition doesn't have to take 10 years. It will take a little time, maybe a year, maybe two. But anything else is just a waste of time, I think. Now, let me just say one more time. If you think success lies in drilling down to smaller and smaller charts in the hope of limiting or confining your risk, then you are chasing a rainbow. The markets have a natural rhythm. The markets have a structure. We live on a planet which revolves in 24 hours, and this is a measured move. This is where you should have entered on the breakout. Here is the algorithmic signal. Here's another one from last night, 6 p.m., and the close last night. Here's another one, 6 a.m., probably. That's all there is to it. If you want to drill down a bit more because you want to fine-tune, look, if you want to fine-tune and if you want to enter here, or maybe you want to enter here, or maybe you want to enter here, where do you enter? It doesn't matter. It depends on how aggressive you are. So my point is, don't get bogged down in the small details, but stay above the noise. Focus on the helicopter view, stay out of trouble, and make sure you manage risk. You certainly need an amount of money to do this, but that is how it works. If you don't have the money, that's okay. Learn to trade. By the time you learn to trade in sim and be consistent in sim, you will find a way to put the money behind your back. All right, guys, 10 minutes to 10. So a little wrap up on the markets. The index is no sell-off. That's the most important information we need to recognize here. No sell-off upon the news on the FOMC. There was no big news anyway. So I expect the indexes to go up, definitely. I expect that the ES and the others will test the previous high. RTY looks very enticing for me, but the easiest trade probably would be the YM and the NQ. I think the tech sector continues to be strong. Expect that to move to the upside. Also, just technically, if the NQ breaks above this and the first candle closes above this level, tell me one reason why you should not be long as a technical trader, as a price trader. Look at the momentum. The width of the linear regression calculation is a mathematically correct way to measure the strength of momentum. Look at this. This blue pillow is widening. If this candle closes above yesterday's high, then that is probably the final piece of the puzzle, whether to go long or not. If you are familiar with our mathematical calculation, which is the calculation of the trigger, I'm almost positive that there will be, by that time, there will be a long signal here. Okay, some other markets. So you know my views about precious metals. And then we had two trades on agriculturals. On corn, for example, go back to last night's video. Here's the setup on corn, and we had another one on soybeans, I think. Okay, so thank you very much again. We'll be back soon, and until then, mindful trading.